Should I refinance my home or should I not refinance the home? Is the timing right? Does it make sense? And overall, is it actually going to save me money or is it going to cost me more than what it's worth? By the end of this video, you're going to have the answers to these questions and you're going to know exactly if the timing is right for you to take this step. You will know what refinancing actually is, why homeowners choose to refinance, when it makes financial sense, and how to calculate if a refinance actually saves you money. All right, so what is mortgage refinancing? I think it's important to understand what a refinance actually is before I tell you whether you should or shouldn't do it. Simplest form, you're replacing your current loan with a new loan. You're refinancing into a new loan, old loan gone. Now, here are 4 of the most common reasons why you as a homeowner would consider refinancing. First, and probably the most obvious, a lower interest rate. You want a lower monthly payment. You want to make sure that you can be in a position where you're going to pay the least amount of interest over the life of that loan. Next, switching loan types. You might find that your needs change. When you live in a home, things are not always the same as they were 5 years earlier. Maybe you want to switch into a different type of loan program. Maybe you know your time is up and you're going to be moving soon, so you want to use an adjustable rate mortgage, which can give you a lower interest rate over that shorter duration of time. Third, and one of my favorites, is to shorten the loan term. Bottom line, if you're borrowing money for a shorter period of time, you're going to pay less to borrow that money. And fourth, cash out refinance. I think this is really important in the current environment because at the time of recording this video, Americans have more equity in their home than ever before. And a lot of people have very low interest rates. So they're wondering, all right, I've got all this equity, but I have a 3% interest rate. How can I use that equity and how can I get it? Cash out refinance can be the answer. When you're looking at refinancing, consider your overall financial picture. There's a lot of people who have very low interest rates. Matter of fact, more than half the open mortgages out there are below 4%. So you're in a position where you may say, well, okay, why would I refinance? I have 4% on my mortgage. However, let's say you're carrying $60,000, $70,000 in credit card debt that's crippling you at 24% interest. Look at the overall cost of your money. It's where you're putting it and how much you're paying on it. So a cash out refinance could make sense for you because you might be able to consolidate that debt. And then now you're in a position where those revolving cards aren't just building up. Instead, you're actually paying them down. You have a strategy. You have a plan. You're in place where it's going to cost you less interest and you're able to effectively get where you need to go. So now we know why you may want to refinance, but let's talk about when does it make sense? When should you actually look at refinancing? Imagine paying your home off years earlier or saving $10,000 to $100,000 on that loan. Maybe you're in a position where you have other monthly payments that are adding up. Credit cards can be forever if you're making that minimum payment. So there could be an opportunity where you take that total monthly expense, your house, all your debts, and combine them into one much lower payment. So imagine you're in a position where overall it's costing you less money. So let's look at the details and back this up with some math and talk about when does that math work in your favor. Now, I know typically people focus on lowering their interest rate. There's a lot of great resources out there, Investopedia and places that'll tell you don't refinance unless you lower your interest rate by 2% or you need to see a 1% drop. Well, not so quick. That depends on how much money you borrow. Refinancing and lowering your interest rate 0.5% on $1 million, it's a lot different than if you're in a position where you owe $100,000 and you lower your interest rate by 0.5%. That doesn't move the needle as much. So it's going to be relative to how much you're borrowing and what impact does that have on your monthly payment. What impact does that have on the actual interest you're going to pay over the life of the loan? I think a lot of people get caught up on the numbers of the interest rate without understanding that it's more about the amount of interest you paid, not this number that's out there that you remember. But for the sake of example, let's use the median price point and talk about a mortgage of $300,000. And what does that look like if you were to lower your interest rate by 1%? All right, a $300,000 mortgage at 7%, that's $19.96 a month. A $300,000 mortgage at 6% is $17.99. So you're talking about a $200 difference. Now remember, I said it's a change in your payment. That's a pretty big drop, saving $200 a month. So think about that. $200 a month over the year is $2,400, or over 10 years, that's $24,000 that you're going to save on the life of that loan. That adds up. So when would do something like that actually make sense for you? Timing is everything. If you're looking at moving in a year, you probably shouldn't refinance. You have to understand what's the relation to the benefit of the refinance along with the cost of the refinance. Even when you're in a position where a lender tells you there's no cost whatsoever, it's in there somewhere, right? There's going to be a position where either you're paying a higher interest rate or the closing costs might be higher than you were initially led to believe. So you want to understand that. It's not necessarily a bad thing. Paying costs could allow for the position to save you more money. Let's say you're in a position, you understand the cost, you understand the interest rate, then timing-wise, When does that make sense? I'm going to give you an example of what those costs look like and some of those hidden fees later in the video, but let's keep moving on. When is it a good reason to refinance? Something to consider: higher credit scores. Maybe when you're in a position when you bought your home, you used a loan that was impacted by your credit score, but now you're in a much better place. Well, refinancing could make sense. Even if rates haven't dropped in the market necessarily, because of that higher credit score, you may be able to get much better terms. The most obvious reason: interest rates have dropped significantly since when you purchased your home. You could be in a position where now just overall the market's moved in your favor and it's time to take advantage of this. Let's take a look using the example that we've already discussed. You have a $300,000 home, 7%, and now you can lower the interest rate to 6%. Keep in mind, when you go through the refinance, there is a process here. You're going to have to update your paperwork, possibly have the home appraised, and you're going to go through this process over again. So you need to understand not only what you're going through, but then what does it cost? Closing costs are a big factor in this. Average closing costs, I would say in a majority of the states, can range anywhere from about $2,800, $2,400 to about $5,000, depending what state you're in. So in this example, if it costs you $2,400 to refinance and you're dropping your monthly payment by $200 a month, well, that's over 12 months. This means that you're going to recover those costs in less than a year. And that's a really good example of when you should consider refinancing. On the flip side of things, let's say that interest rates maybe haven't moved as much, but you can still get that 6% interest rate. However, remember, watch the costs. How much is that costing? Well, in this example, it's costing $24,000. And I know that may sound absurd. Trust me, there's going to be some lenders who may try to convince you to do this. Don't do it. Going through and looking at that position, I mean, $200 a month, but it costs you $24,000. Yeah, maybe that lower payment feels good, but it's going to take you almost 10 years to recover those costs. So that's an example of something you want to avoid. So the idea here is, what's your break-even point? How much are you saving versus how much it costs? Something else to consider after you've looked at all that cost structure: what's the timing on this? Are you 5 years into a 30-year mortgage? If so, do you really want to go back into a 30-year loan, and what does that cost you? Look at the overall cost of the interest over the life of the loan. There's a lot of lenders that will try to steer you towards a much lower monthly payment. You do the math, you'll come to find out that as far as the actual interest that you pay over the loan, remember, that's what matters. It's how much is this costing you? How much equity do you have in your home? You don't want to go into a position because you think you're lowering your payment, you're saving all this money, only to find out that you pay the exact same amount of interest over the life of the loan, and maybe it costs you $6,000 to do that. Who wants to pay $6,000 just to get where they already are? Overall, refinancing is a good idea. You do want to reposition your money. You want to pay less interest over that loan, and you should do this when the timing is right. But I've got to tell you, you have to watch out. I mean, lenders, there's a term called predatory lending. That term exists for a reason. And essentially what happens, it's when banks and lenders will go and prey on people who are not educated in when this might make sense. They're basically looking at the fact that everyone wants to lower their interest rate. The time of recording this video, we've been dealing with higher interest rates for more than a few years. And I hear this from every single client. What does refinancing look like? When can I refinance? I like to educate my clients and talk to them about it, but I can tell you, most of my clients will reach out to me at some point telling me they just got this in the mail from a lender. This looks amazing. Look, they can save all this money on their payment. I would say 99.9% of the time when that solicitation comes through, I'm able to debunk that myth and show the client how this is really just someone reaching out, trying to make a quick buck. Refinancing isn't about making money for your lender. Refinancing is about saving money for you and your family. If you like the ideas in this video and you think that it's helpful, I'd encourage you to check out my other video on how to leverage the equity in your home. So knowing that and trying to figure it out, right? Let's make sense of this. Here's a quick checklist on when you should consider refinancing. Starting off, how much are you lowering the interest rate? Or more importantly, what is that doing for your monthly payment? And what does that mean as far as the cost of the interest over the life of the loan? Again, if you're resetting the term, overall, how much is this going to cost you? More important than anything, can I comfortably afford the new payment? I've got to tell you, I have a lot of clients who wanted to move into a 15-year loan. I have some who did this, and then they reach out later on saying, look, I need to refinance back into a 30-year fix, and things have changed. I can't afford this payment anymore. So make sure that you hope for the best, but plan for the worst. Before you jump into a shorter term loan, make sure you're going to be comfortable for that in the long, short term. Next, I would say the timing of this. How long are you going to stay in your home? Again, if you're looking to move in a year to 2 years, even lowering your interest rate by 1% or saving a few $100s a month may not make sense because it could cost you more. You may not recover those costs. Again, that break-even point. You may not recover those costs in the time that you're going to own your home. Bonus tip, Let's say you're going to move, but you're going to keep that home as a rental property. Now, that could be a good move because a lot of people don't realize that when you move out of your home, you don't have to change your mortgage. Let's say you refinance your home, you're going to live there for a year, and after that, you're going to turn it into an investment property. Well, now you have cheap money on that home because you don't have to turn around and change the financing because it's an investment property. So even if you're thinking of the short term, make sure you're also thinking about your ownership of that term. Something else to consider, do I have enough equity to take cash out? If you're in a position where you put 5% down on your home a year ago, and now you're trying to do cash out refinance and take 20% equity out of your home, I'm sorry, I don't want to be the bearer of bad news here, but you don't have enough equity to make that work. And you've got to watch out because there's a lot of lenders who'll be saying, oh, you know what, this is a good idea. I think you can get that cash. Let's do it. Let's give it a go. And then, well, it's not their fault when the appraisal comes in and you didn't have the equity in the first place. Make sure you're working with a reputable lender, someone who has the experience of working with clients and helping them refinance, also someone who's going to steer you in the right direction and not just try to get the deal done. And one of the last things to ask yourself on this checklist is, how's my credit? Has my credit score improved? Is there anything that may have lowered my credit score? Hopefully not, but you want to think about it from a perspective of, can I qualify for the better loan? If you answered yes to some of these or most of these, then you definitely want to start looking at your options and consider refinancing. Now, I couldn't end this video without giving you some extra information that I feel strongly about and I think is incredibly important. Remember, lowering the interest rate is great because it saves you money. The focus of this is to save money financially or to put yourself in a better financial position. If you're looking to refinance because it makes sense, you're going to lower your interest rate 2%, your payment's going down $500 a month. Let's say in this example, you've been more than comfortable paying that payment up front because you did the diligence up front. You knew that you were going to be able to afford that home. Well, a good financial tip, continue to make the higher payment. Applying additional money towards your balance every month will reduce the overall amount of interest you have to pay over the life of the loan. So for example, if you make the equivalent of one extra payment a year, let's say your payment is $3,000, you have $475,000 loan amount, you're paying $3,000 a month, and that interest rate was at 6.75%. If you make that extra one payment, that's the equivalent of being at 5.5% on your loan. That's the amount of interest you'll pay. Gaining more equity, paying less interest. That's how you want to consider using your money to work for you. Don't just take the payment at face value if you have that option. Remember, your home, it's a place that you want to love where you live, but it's an investment as well. There are huge financial upsides when you treat this asset appropriately and you minimize the cost of that while maximizing the amount of leverage you get through the equity that you build. A mortgage refinance isn't free, regardless of what someone tells you, but it can be a great plan and strategy to save money, shorten the time that you have to pay on your home, and overall put you in a better financial situation. If you're thinking about whether or not you want to refinance, give us a call, reach out. I'd be happy to talk to you if you want just a second opinion to see, is this time right? Let me know. We can talk through your situation and make a plan and a strategy that works best for you. The link is in the description, and I'd love to hear from you.